What's up, everybody? Welcome to another edition of Zach's Live Trader. Here with you as always, I am the People's Champ of Wall Street, the bearded boy wonder, Dave Bartosiak. And today, my friends, we're talking about Amazon, ticker AMZN. They're going to be reporting after the bell today, so it's one of those day of things. And I know in the title we call this 5 reasons to buy Amazon ahead of earnings, but I don't know that it's necessarily representative of what we're doing here. So I think we're going to switch up titles. I think we're going to start naming it like the playbook for XYZ earnings, something like that. Get a little, get out the misnomer a little bit. But we're just trying things, because anytime you put earnings in Amazon or earnings in a stock in the title, people get bored. Like, they just gloss over. And we're not that boring, right? No, not at all. No, we're not. Dean, Trevor, Richard, Kurt, how you doing? To all the folks out there, this is their first time. What's up, Aaron? How you doing? Guys, send me those emails, livetrader@zax.com, if you're not already hooked up on our distribution list. I promise you don't get all sorts of nonsense. The only thing you get is emails from me telling you when I'm going to be doing these free live shows. Also, again, if you're new, check us out, or old, I guess, too. Check us out in the chat room, the Discord chat room. It's discord.gg, and then you got little P, big BWCM, a little S and a G. It's over there. Yes, I know it should look better than that, but that's what we got, so there. Why don't we go ahead and get started here? Like we always do, using the price consensus and EPS surprise chart on Zax.com to glean some information here. Black line corresponds to the right y-axis, which is price. The multicolored lines represent the evolution of our Zax consensus estimates over time, and those correspond to the left y-axis. The green arrows are earnings beats, the red arrows are earnings misses. Now here lies the rub. For a little while there, we actually cared about Amazon earnings. The world cared about Amazon earnings because they were making money, and it looked like, hey, they were starting to be like a normal company like everybody else. And then Jeff Bezos is like, you know what? I'm making a lot of money here, and who has a better return on investment than me? And you know what, Jeff? You are right. So remember, again, this is one of those scenarios where you are betting the jockey, not betting the horse. So 100 shares of Amazon is 100 votes for Jeff Bezos. Mr. Chumber, Lorraine, Mr. Wallace, how are you? Welcome. So that hampers our entire Zax analysis here a little bit, as most of what we use Zax.com for is that earnings estimate revision. So all of this is geared to try and figure out if earnings is going to go up or if earnings are going to go down, right? So when you have a company that really doesn't care so much about earnings, right? They would rather reinvest those monies, those funds, into businesses that will create more revenue and more sales. That tends to throw this data off just a little bit. And that's when you get things like this, right? You get these huge dips in earnings for Amazon, which any other company, this is like a death knell. But because we know that all this is Jeff Bezos taking money and investing it into other businesses, we're okay with that because the man flat out delivers. So revenue is what we're going to stress here when we're looking at Amazon. I'm going to bring that up a little bit later when we're looking at some of the valuations. They're going to be more focused on that price to sales ratio rather than anything in the PE realm. But it's still important to kind of keep an eye on some of the trends in earnings, because you've got this sort of shock to the downside while they're kind of pricing in what's happening over there, and then you start to rise up out of it again and go, okay, well, we know they're making those investments. Now, what are those investments going to yield here for us? So I think that's just a little bit of the cyclical nature that you're going to end up seeing here in Amazon earnings, okay? So what can you glean from the price consensus EPS surprise chart is that we're not as concerned with the EPS number with Amazon as we are with things like revenue. Mr. Looney, how you doing, sir? Welcome. And when Amazon has a disappointing quarter, they do still have a tendency to sell off a little bit, right? But when they have a good quarter, oh man, it really can go off to the races, which is great, okay? So, just what you can glean from this chart, which is the single most important chart in the world, is that it's not as important when it comes to Amazon. Hate to disappoint, but that's how it is. All right, so now let's look at the detailed estimates page here on Zacks. Zacks ranked number 3, hold. Now, people are going to be frustrated by this. And trust me, I get all sorts of haterade with people talking about how, you know, how could you be a hold if it just keeps going up? That's my angry hater voice. How could you make it a hold? Well, because all of this analysis here is based on earnings, right? So I don't think you can argue that the earnings for Amazon have been going up, and away. So all of our rankings are based on that. So there. So that's a fancy way of saying don't worry so much specifically about what number Zacks rank we have this here. Now, overall, the industry's in the top 43% of our Zacks industry rank. So there's a lot of businesses out there doing better growth-wise on the EPS side than the e-commerce business. Again, they're reporting after the bell today. So this is good because we do these, we give you a little bit of analysis, give you some ideas if you're really bearish heading into this report, if you're really bullish heading into this report. But I think the most important part is this a stock that you want to hold over the long run? And after the earnings report, what would be a good entry depending on how you feel about it, right? ESP is negative. That means there's been a recent revision to the downside. Of course, the PE on Amazon is going to be astronomical. At least it's positive. Now let's look at the sales because this is what matters. I'm going to dig into these sales numbers a little bit more on the next tab. But for now, we could take 37.14% sales growth for the current quarter. Next quarter looks like 37. Next year, 29.76. So you're always going to see the 30%, you know. Hefe, how you doing? Welcome, my friend. Now looking at the earnings estimates, still going to get 20% growth here, 14% next quarter. Current year is actually a little bit of contraction. Next year is supposed to be a lot better. This is, again, on the EPS side here for Amazon, I don't get it. You get some analysts going to the upside, some analysts going to the downside. It's really just a crapshoot when it comes to their earnings because you just don't know how much of that money are they going to reinvest back in the business. And we're not really so concerned, right? Nobody really cares what the PE is on Amazon. Nobody. But these estimates have sort of moved. So you can see this is the magnitude of our consensus estimate trend. So this shows you historically where those estimates were and how they've evolved over the last 90 days. So current quarter's basically been stagnant, $1.86 to $1.85. That's really, there's nothing going on over there. Next quarter has gone from 150 to 148 to 147. Now a jump to 169. Current year though hasn't moved at all. But next year getting a little bit more bullish, a little bit of sunshine there on the consensus numbers for Amazon moving next quarter. Again, this is just EPS. Shouldn't care that much about EPS on Amazon, right? Because it's just all over the place. And look at this absurd number. They were looking for a penny, but they got 52 cents. A 5,100% earnings surprise. Earnings surprise is this percentage makes sense when you're not looking for a penny. If you're looking for a $1.40 and come somewhere else, that's one thing, but silliness. Okay, so as promised. Oh, look it, I got stuck on Overstock.com. Who is making me look at Overstock.com, Hefe? Definitely you guys. Definitely you. We were looking at that yesterday. Okay, let's look at revenues here first. Because I didn't get a good revenue number for the year. So here's the revenue number for the year. 30.45% revenue growth. Next year, 29.76. Look at the year after that, 21. What? More, just like, that's like mere mortal numbers. That's like when they were just muddling through here, 2013 to 2015. The giant that is Amazon set to slow in 2019. I know that feels like a long way out here, but that's interesting. Very interesting. All right, and then on EPS, like I said, this is not as relevant for us here. And this is why. So historically, I can provide some context of a company making $27.58, losing 54 cents in 2014. You know, just all over it. And so this neat, nice little progression of EPS, it's not going to happen. Okay, it's just not going to happen. But you wouldn't want it to happen. When that does happen, then the very fabric of Amazon has changed. That's not what you're investing for here. Price to sales. This is going to give us some perspective here as to how rich the valuation on Amazon is from a price to sales perspective. Because price to earnings, you just can't use it. But you can use this. And what this is telling us is that this thing is getting expensive. It is. Flat out expensive. Can I go further back? I don't know if I can go further back than... Yes, I can. Give me 15. Look at this. We're going back. I'm talking way back. The last time Amazon's price to sales was this high was in 2003. That's pretty dramatic. Can I go further? Just click on max. So 03, and that was sort of a reflation. So here's your dot-com bubble. Can you imagine trading at 33 times sales? 33 times is a high PE, okay? Can you imagine trading 33 times sales? That's crazy talk. Anyway, after that bubble pops, Amazon recovers, sort of reflates. Is it reflates or reinflates? I feel like they're both words. And now is at levels so you haven't seen since 2003. Is that alarming? Should that be alarming? What do you guys think? Are you alarmed by that? Now remember, the growth projection going out a couple years here, this 30% growth, is likely less than what the growth projections were back in 2003, right? You were probably looking for much larger growth out of a smaller company than you have now. Now it's, have we begun to reach this critical mass for Amazon? Are we reaching the end here? Is it the end of the bull? Pretty interesting here. Well, remember, and Jeff's bringing up an interesting point. What was it 56 or 61%? It was one of those numbers, I forget, for Alibaba of their revenue growth. That's twice what we're trying to get out of Amazon, okay? And now we can compare here. Rather than comparing to the S&P 500, why don't we compare this to Alibaba? We did this comparison yesterday. And here you can see that Alibaba trades at 18.5 times sales. So Alibaba is basically trading here at 1999 Amazon valuations when you're talking about PE. I mean, price to sales, rather. Price to sales, right? So a little bit different. They're richer because their growth is significantly more on a revenue standpoint, and their valuations, and they actually have some growth on the PE side. Let's just pull this up just because we're comparing Alibaba here, we don't have to look back in the Stone Age. We could just look at the last 5 years. Not even. Let's just look last 3 years. Let this load up here really quick. Just so literally, you know, Amazon is off of the charts, and while Alibaba is trading down here at 37 times earnings. Now again, Amazon's doing a lot of investment with those revenues that they have, which hits that PE, right? Because the earnings just aren't there as much, okay? But more revenue growth than Alibaba, those huge numbers. And then what ended up happening today is a little bit of a, dare I say, disappointment. Well, yeah, we can call it a disappointment. Let's check in with Baba really quick before we get back here. You know, yesterday we talked about selling the 190, 250, 190 put spread. That still looks okay. I was even telling people if you didn't do it yesterday, I think it's still maybe a decent idea to put that on right now. Like right now. Or there was even some juice going south of the 50-day moving average. Kurt and I were talking about it in the chat room. Again, the Discord chat room. The link is in the little side live chat here, but it's also coming on the bottom end of the screen. It's free for anybody to come hang out in there, just like all these things. We just give it away for free. That you could probably find a put spread, the 180, 250, 180 put spread down under here. Because what are the odds following this earnings report that Alibaba breaks that 50-day and spends considerable time down there? Yes, it could happen, right? It's happened before. It happened here, okay? But there would just have to be more pressure. So I think because the earnings report, intraday dips down, started to creep up a little bit. Yes, it could flutter back down there a little bit, but I think that's an opportunity to sell into a little bit of bearishness here. I think that's a decent idea. Anyway, so the moral of the story here is Alibaba didn't have a fantastic reaction to that earnings report. So let's look at Amazon. Just kind of a runaway breakout since the dawn of time. Not since the dawn of time. Since, let's see here. Okay. Oh, my goodness. I got to do this again, guys. Hang on. I got to check in here. You know. Oh, no. There. It's hidden. Okay, there we go. Sorry. I'm going to end up biting the bullet and going pro with these guys. But we're just getting into this. So basically since January of 2015, it's been a pretty meteoric rise. Here I've got the 50-day and the 200-day. Note how you get these periods where the 50 comes down to the 200, and those are pretty much have been buying points along the way. That sort of reversion needs to take place eventually, right? We just can't go up, and away forever. And it has been sort of up, and away here for Amazon recently. I'm going to use some fibs here. Look at some levels. So the 23.6% retracement of this recent move here from the, hey, it's my birthday! From my birthday lows to yesterday's all-time highs. 23.6% retracement puts us 1346. I kind of like that because look at this sort of intraday wick getting up there close. So that was a little bit of short-term resistance, at least before it broke out. Kind of like this 1200 level, right? It gets up, dips, finally fights its way on through. Of course, this fight took a lot quicker to resolve. But I think that's going to be where you're going to see something. How much do you want to bet? So let's just call that $13.50. Do you think that $80 is going to be the implied move on these options? Don't go stealing my thunder, guys. Where's Tajesh? Tajesh, don't you do it. We're going to go find it. We're going to go dig in here and find it. It's amazing how the tone has changed We were so bullish just a couple of days ago. Now a little bit of caution is popping up. I think that's a good thing, guys. I like that everybody's getting cautious a little bit. This is good. This is all very good and healthy. This happens in earnings season. You get a lot of chopping back and forth, and then the market inevitably finds its direction. Don't forget, we've got a big non-farm payrolls number. Isn't that tomorrow? I think it is. I'm pretty sure it is. I've been talking about it for all week, so there better be, unless it's next week, but it's typically that first Friday. Okay. So I suppose there's nothing else to do but start to look at this options chain. Change it from the stack view to the side-by-side. This way you get calls on the left, puts on the right. Oh, man, boy, this is going to be a little chunky, though, my friends. 1432. So where Amazon's trading at. 1432. Oh, they're actually pricing in a little bigger move than I thought. Let's look at this. So 49.15 by 50.70. So that's what? We're just gonna round here. $1.65, so 80, maybe 80. There you go. So we're gonna say 49.95. Might as well just call that 50. And then the puts are 44.95 by 46.05. So let's just call that 44.50. I'm sorry, 45.50. So they're looking for a little more. What happened? Oh my goodness, I totally screwed that up. 49.95. There we go. Plus 45.50. Boom. So they're looking for 95.45. $95 move. 6.66%. A devilish return is what they're looking for out of Amazon. Let's see how that's stacked up in the past. I'm going to look at some surprises here. What has the surprise been on Amazon? Last quarter, a fantastic move. 13.16% jump on that blowout quarter last quarter. -3 the quarter before, then a 1, a -2, a -5, a 3. So last quarter was out of nowhere, kind of, because there was a whole stretch where Amazon wasn't doing too much. But then back in 2014, 2015, it was popping off all the time. So you had a lull, 1, 2, 3, 4, 5 quarters of a lull, and then all of a sudden, boom, goes the dynamite last quarter in Amazon. And that was a real nice surprise on the revenues. And if you notice here, EPS, when they had the big miss, stock goes down $30. It's amazing, $30 and it's a drop in the bucket. It's just 3%. Always amazed. Okay. Let's just look at this February 6th expiration. February 16th. 6th. What's going on here? Feb 16th expiration. Now these are going to be expensive and continue to be expensive. That's how it is. Oof. Things get really pricey when the difference in the strike prices is $10, right? They get very expensive out there. $90, $95 to the upside puts this up over 1,500. into the 1520s. So look at how expensive this makes dollar-wise, nominally, to sell call spreads out of the money. The 1520 call is $2,800. I don't even know how we should show this the easiest way. Let's just do that. 2,800. 25 is what you'd get back for selling that buying that 1530 rather. So 275 is the net credit you would get on this spread. But the problem is that the difference in the strike prices is $10. So that means to make that 275, you'd have to have 725 at risk. So you can make 38%, but you got $700 of risk on the table. That's a lot of juice, my friends. A lot of juice. Now, let's adjust this so we have the show all. This is gonna this is gonna give us a lot of strikes here. There we go. Oh my goodness. Still going. I guess we got to give this a second. That's a lot of strikes down there. Holy smokes. That's crazy. All right, let's go to the on the call side, or on the put side rather. If you're selling, what happened to my chart? Here's my chart. So we said there was some support at 1350, right? Real support all the way down. This is 50 days, all the way at 1230. I mean, that's way down. 1267, 1346. The market basically pricing in that $95 move. So that's actually a little bit below this 23.6 retracement. If Amazon and Apple dip, could we be in bear territory? For who? For Amazon and Apple, or for the market overall? I don't think that's even a distinct possibility right now. I don't. I think the EPS growth is just too strong. There's too much growth. Okay, there's some relief here, guys and gals. $90 out of the money. If you're looking here to short a put spread well out of the money, you could do this without putting your whole life at risk. So selling a 1340, 1337 put spread, you can get $19.65 for selling that 1340. Buy the 1337.50 to give yourself downside protection. That's going to cost $19.08. So the net credit on an out of the money short put spread here is 57 cents. The difference in the strike prices, $2.50 minus that 57 means $193 is the amount of money you have at risk. So you can make about 30% on this in 2 weeks. And all you need is shares of Amazon to stay at or above $13.40 at expiration. Okay? So I'm going to throw this one out there as a bull credit idea. Short the Feb 16, 1340, 1337.50 put spread for a 57-cent net credit. Because 1340 that gets you shy of that 23.6 fib. Also gets you in here. Now there is this little gap that happened. But that was a gap that previously had some trades. So like I was talking to Kurt this morning, and I kind of want to expand on what we were talking about, that a good way to play this earnings report might be to sit, see if it gets down wherever, right? If it sells off a little bit, if it gets down here, and then selling this put spread that we're talking about after the report. Because it might get a little bit more expensive too, which is good if you're selling it, right? After the fact. That might be the way to play it, is to keep your eye on this after the report. If you want to brave it before, of course, there's that too. Now, if there are bears out there, as well there should be, I think. Bears can do this. Bears can get a little bit vertical on a put spread. So if the stock's pricing in a $95 move to the downside here, you don't have to get every bit of that 95. You can get in between there and make some money on the way down. So let's look at the options chain here and see where some of those opportunities are available. So we don't even need to look all the way down 1400, right? Because let's not get so vertical that you're totally priced out of this thing. Look at just here. Just this little $5 spread. Buying the 1430 costs $55.53. Selling the 1425, you're going to get back $52.98 of that. So the net outlay on this ends up being $25.55. Not that attractive. It's not attractive. You're not even going to double up on this, okay? You're not even going to double up. So you can inch down a little bit further. Or you inch out. Either inch down or you inch out, right? So you can keep your anchor here, but then instead of going here, you go a little further out. This is going to make it, the amount of money you're going to have at risk is going to increase here, right, as you scoot down a little bit. So if you went to the 1422.50, it's going to get a little bit more expensive for you. 55.53, 51.88. So here it's 365 is your net outlay. But the good news is, difference in the strike price is 750 minus that 355. $365, is that what it was? 375. I can't even remember. I'm losing my mind today, guys. I don't know if you know this, but I am not sharp today. 365. There you go. Okay, so the difference in the strike price is 750 minus that 365. You can make 385 on 365. So there's where you can double up. The 430, 14. So 1430. Bear debit. Long Feb 16th. 1430. 1422.50 put spread. 365 net debit. Then if we get this shock to the downside, you're going to be just fine. You can cash in a little bit and be good. I think my trade that pays officially here for Amazon is going to be to sit on it, wait till tomorrow, and then sell a put spread out of the money if it dips. I think that's officially, that's a smart way to go. But I'm going to make my trade that pays the bull credit spread. Yeah, a lot of people have been buying more and more from Amazon. This is true. This is true. And their cloud business is very strong right now. Very strong. I've just been getting cautious on reports because there's been so much that has been a head scratcher this quarter. Again, case in point, Alibaba. Now the good news is we are going to be golden on that 192, 190 put spread here that we were short on Alibaba, right? Golden. As long as that's the worst of the downside, we'll be fine. And then on AMD, yesterday was a great day. Today it's given back a little bit. But I still like how that's headed. Obviously, I'm going to cover this in the GBU that's going to be coming up here in a little bit. So my plan is basically finish up here, go eat lunch, come back and do the GBU for you folks. Looking at Apple really quick. Look at this trading range. If I were betting on Apple, I'd be betting in the positive direction on this. You could sell some shorts down here. Even safer, or sell some puts down there. Even safer would be selling under 160 here. How expensive is that? Let's peep in there real quick. Why would Amazon move down? You know, why are any of these things moving down? Because more people are selling than are buying. You know, this is the problem is we can't always come up with a logical explanation for things. And I think that's what gets people so frustrated when it comes to stocks. Because it's like, well, why did it go down? Well, just, man, more people were selling than were buying that day. Sometimes there's not an explanation. We can theorize over the long run what should be working out. And we do know that in the long run, earnings work. We do know the companies that are growing their earnings and growing their revenues are going to do better over time. We just know that. It happens. But in the intermediate, in the short term, you have no idea. So a big fund is reallocating and decided that they were overweight way too much in that stock, and then they used the liquidity available surrounding the earnings report to dump their shares. You just don't know what's happening in the short run. Just want to peep in real quick here on Apple. And, of course, I left all of these puts up here. Look at that. I think this is what I would be looking at. Shorting this put spread out here, I think, is a decent idea. Look at that. That actually looks really good. So that's the, you're going to get 227 for the 160. 162 is what you're going to have to pay for the 157.60. That's 65 cents that you're going to make. Difference in strike price, 250 minus the 65 is 185. So 65 and 185 is 35% that you can make. All you need is shares of Apple to stay at or above 160. The other thing is, if you got enough money and you like Apple, you can just go ahead and short those 160 puts. It gets put to you, and your cost basis is extraordinarily low, down in the 157s. Okay? In terms of lottos, Aaron, yeah, if you YOLO this one, you only die once too. YOLO, YODO, my friend. Very expensive to mess around with that Amazon stuff. I'd suggest avoiding that obvious, easy way to lose a bunch of money. Okay? Okay, did I already say trade that pays? I did. Don't really have any lottos worked out for us here. I've got to get the GBU popping off and sent out, so we're going to do that. I'm going to film that at 1 p.m. Central with the crew up in Chicago. I'm going to put that together for them, put together the spreadsheet within the next 20 minutes here, and then I will be hopping in Lilith. That's right. She has a name. Her name is Lilith. It's nice and sunny out here. I got the top off. I'm going to go grab some lunch, come back, and make it happen for you folks, all right? That's all I got. We don't have anything scheduled for tomorrow. I still don't know if I'm available early in the morning tomorrow. The girl's coming into town. She left yesterday morning. She's coming back late tonight. Then she's leaving again tomorrow morning. So I don't know. I do. Yeah, wear a hat. You're right, Kurt. I can't get the. I always wear a hat, Kurt. Everywhere I go. So I don't know if I'm gonna be, here. I might have to drop her off. I might have to drop her off in the morning. She's going to Mexico for a few days with her friends, which is good. No offense, but I get a lot done. I've said that before. I get a lot done when she's gone. A lot. Like a lot. Like I just make so much money when she's gone. It's absurd. It's absurd. I thought about how much money I lost this weekend. Not just the outright loss of the money outlay, but the loss of potentially making money elsewhere. Oh, Mr. Chumber, that's February 16th, I believe. I think this is the 16th. Yes. 16th. I am home alone. Ah! And on that bombshell, I'm going to leave you. So thank you guys so much. I'll email you if I can do stuff tomorrow. If not, you'll see the GBU, and have a fantastic weekend. I will see you in the chat room as well. Thanks, guys.